Hi, my name is Christian Waldegrave, Market Analyst at Teekay, and this is our LNG shipping market update for the fourth quarter of 2012. Now looking at what's happened in the short-term and spot LNG shipping market in the last few months, spot rates have actually come off from where they were earlier in the year. You'll recall that earlier in the year, short-term and spot LNG shipping rates were up at around $140,000, $150,000 per day. That's come down now to about $110,000 per day, and that's really just due to some seasonality. Gas demand is weaker in the third quarter between the summer and the winter seasons. We've also seen some lower LNG supply in recent months due to some production outages and some plant maintenance. And also an important driver of the short-term market in recent months has been the arbitrage between gas prices in the Atlantic Basin and gas prices in the Pacific. So earlier in the year, gas prices in Asia were about $18 per million BTU, and gas prices in Europe were about $10. If we look at the situation now, gas is still about $10 in Europe, but it's dropped to about $13 in Asia. So that doesn't support the movement of LNG from the Atlantic to the Pacific Basin. So we've seen some of those volumes come off. So that's why we're seeing slightly lower rates into Q3. And then if we look at the next couple of years, it's difficult to say where the short-term rates might move to, but one thing we do know is that there's quite a large order book now on the LNG shipping sector. There's about 77 ships on order, and those are going to start delivering in 2013, but especially in 2014. And of those 77 ships on order, about 32 of those don't have a contract. So they're going to be looking for any type of business, whether it's short-term or long-term business. And so that might drive the rates down, especially because if you look at the actual project side, the gas side of it, there's not actually a lot of new gas that's coming online in the next couple of years. The projects are largely going to come online from 2015, 2016 onwards. So those are the large liquefaction projects that are being built in Australia, also some in North America, Canada. We might see some exports from the US as well. And so we see that all those projects are going to start coming on from 2015 onwards. And so in terms of the shipping side, as I say, in the next 2-3 years, you're almost getting a lot of ships before the gas. But after 2015, I think you're going to need a lot more LNG carriers than is currently on order. In fact, if you look at all the LNG projects that are due to come online between now and 2020, and you filter out some of the projects that might not happen, and you take into account some delays, we still think you're going to need around 100 LNG carriers more than is already on order now. So we think there's still going to be a lot of demand for LNG ships. And if those projects are coming online in 2015, 2016 onwards, those project developers have to bear in mind that the lead time between ordering a new LNG carrier and having it delivered is about 3 years. So if you went to a shipyard now for an LNG ship, you're probably looking at second half of 2015 for a delivery slot. So what we're seeing now is that a lot of the projects that are needing ships post-2015 are now starting to look at tendering for vessels. And we've definitely seen an uptick in project activity and tendering activity, and we expect that to continue into 2013. So we're still very excited about the long-term prospect for LNG shipping, and we're seeing a lot of activity on the project side, on LNG point-to-point, but also on floating storage and regasification as well. And so we think these next year or two, there's going to be a lot of opportunity in this sector. So that's a summary of the LNG shipping market for the fourth quarter of 2012, and join us again next quarter for our next update.